there, very good afternoon. Welcome to 80 Now. You're watching Your Trades with me, Kanishka Sarkar and Mansi the Way, a show where we'll take you through all that happened in the markets today and how must you prepare for tomorrow. But before that, a quick look at how the markets fared today. Ankita, it was a day of swings, trading between green and red, but we have finally ended deep in the red, below that 24,500 mark.
Absolutely, Kanishka. We started well. But then we did lose on to all the gains that we did see in the first, let's say, one and a half hour of trades, and we did slip below 24,500 levels while we were closing down around 100 points, and from the higher points, if you see, it was down around 200 points as well. There were stock-specific movements which were happening in the market, but all the movements towards the downside largely. Praj industry did plunge as profit did dip 94%, and also tariff delays. So clearly indications coming in from across the globe which is not helping the market, and also stock specific, and we are also in the last leg of the result season. However, Astral was another stock which was not performing at all in the trade today. Just like Praj Industries, the stock did dip on softer margins in Q1. And also brokerage reports did come in after the quarterly earnings which are weak, and that did not help the company. The stock eventually did dip around 8.5% while it was closing. Muthoot Microfinance also a weaker set of numbers as bad loans did surge. So that was another stock. We did talk to the management also during the session, and we did try and understand what is their forward-looking plans for the company. Another one was Bata, which did slip on weaker Q1 earnings. So clearly, as you see, is the last leg of earning, and the quarterly numbers as weak they come in, the stock eventual impact is witnessed in the stock price, and eventual impact is of course witnessed in the development of the particular stock also, and the spaces also. Mixed Q1 for Hindalco, yet another one. The margin was up around 99 basis points on a quarter-on-quarter basis, but at the same time, after the numbers come in, there was largely volatile trades in the stock price of Hindalco, and it did close around 0.5% to 1% down in the trade. And Trump did extend China trade truce for 90 days. And India is hopeful for sustaining another negotiations. Now, that all happens during the month, this month itself. So, important economic indicative actions and a lot of global events which are all lined up, which we'll keep an eye on. But the markets did see a downside today, where we started well, but it did not sustain.
Absolutely. So that's how the market shaped up today. And apologies, Mansi, for pronouncing your name incorrectly earlier. And of course, the big global headline remains that Trump has extended the China trade truce deadline for 90 days. While India, on the other hand, is hopeful of sustaining BTA negotiations going forward as well. But to discuss this further and how the markets are going to shape up in the following week, that is, in the rest of the week, we are now joined by Ajit Mishra, SVP Research, Religare Broking. Hi, Ajit. Very good afternoon to you. Now, what do you make of the markets? The kind of moves that we saw today, swings coming in, first in the green, and then we were in the red, and we have, ended below that 24,500 level. What do you expect? Do you think this consolidation is going to continue for the rest of the week as well?
Yeah, good afternoon, Kanishka. Good afternoon, Mansi. So, this is not new. Means we are experiencing this for last 6 weeks, that initially we start the week on positive note, and we try to regain some of the lost ground in the following session. But by the weekend, we surrender all the gains and inch lower. So it's similar texture. Means yesterday it was a day of rebound. Today we made an attempt to extend those gains in the early hour, but as the day progressed, we eventually ended around the day's low. So this indicates uncertainty. This indicates lack of decisiveness among the participants, and bears are completely under control. For this to change, we need at least a couple of days close about 24,600 mark. Then only we can see some recovery or respite towards 24,800, 25,000 mark. Otherwise, this side kind of like range bound action with a negative bias would continue. With 24,200, that's the long-term moving average based on the daily chart, is something that the Nifty might test. So as of now, yes, the texture still looks sideways to negative with the sell on rise approach until we break 24,800 decisively.
So 24,800 is the level which we need to watch out for. Till then, it's a sell on a rise strategy. Yes, we did surrender the gains, even any bit of the gains, Ajit, during the session today. And that's been the story since last few weeks now. But then stock-specific approaches, a little bit of momentum was seen in players like M&M, Maruti, L&T, NTPC, Tech Mahindra, to name a few. What are your trading ideas for the session next?
That's right, Mansi. So it's not that all the stocks or sectors are in sync with the market trend. In fact, we are seeing noticeable strength in the auto space, like you mentioned, M&M, TVS, Maruti, Eicher. They all are holding strong. And today we have recommended M&M after almost a week-long consolidation. We expect the stock to inch or resume its overall positive tone and make a new record high soon. So 3350 is what we are eyeing in the near future. So with stop at 3180, one can buy M&M at current levels. At the same time, Mansi, since we are seeing negativity also, continuing with every passing day. So some of these short ideas should also be on your radar. So within the banking space, IndusInd Bank, after the failed attempt to reclaim or sustain above its immediate hurdle around 900 mark, we are seeing gradual drift and in fact a fresh shorting pivot formed on the daily chart. So we expect a possible decline in the near future with the next support at 730 mark. So that should be your target area. So with stop at 815, in fact, one can look to go short IndusInd Bank at current levels.
Okay, so a buy call on M&M and sell call for IndusInd Bank. That's the word coming from Ajit. Thank you so much, Ajit, for joining us today and taking us through what the market shaped up like today and what to expect for tomorrow. But let's get going then. Srishti is now joining us with a technical chart check. Srishti, which are the stocks on your list today? Breakout or breakdown?
Actually, two breakdown stocks, even that was surprising for me that after a while we have spotted two counters, both on the breakdown side. Firstly, let's talk about the counter that is Tata Communications on the charts, because what we spotted is that the stock is once again seeing a rejection exactly from its 1800 odd levels, and it's multiple times that the stock has halted at these levels. But of late, the stock has been managing to inch higher and taking support at its 20-day moving average. But in today's trading session, what we spotted is that the stock actually broke below its previous week low as well and is now facing rejection exactly from its 20-day moving average and trading way below that as well. So hence we spotted this stock as the breakdown stock for today. But the next counter is also one of the breakdown candidates, and that is Bajaj Finance, one of the top losers on the Nifty 50 side. A very surprising decline of almost 3% coming in on Bajaj Finance. But what are the charts telling? Let's tell you that. If we see the chart, then it is indeed facing rejection from its 20-day moving average and trading below that. But in the last couple of weeks, you will see that the stock has been finding a bit of a ground, or rather trying to hold on to that 870 odd mark. But in today's trading session, a very sharp fall coming in, and hence the breakdown. So these are the two stocks that we wish to highlight as breakdowns today. Back to you.
Thanks for that. And surprisingly, two stocks on our breakdown list in the technical charts. We'll keep an eye on all of those. Moving ahead, let us now take a look at the word from the Vice. Mark Matthews, Head of Investment Research, Julius Baer, shares his list of sectors that he likes. He is selective within the large banking space while finds the hospitality sector interesting. Let's listen in.
Really are stock pickers in the sector. But if I was to generalize, the thing about banks is in any country in the world, including India, they're kind of the heart of the economy. So if you think the economy is doing fine, doing well, then banks should benefit from that. And in India, there are these big tax cuts from the budget that should flow through into the economy. I think the hospitality sector looks very interesting in India. If you have a rising middle class, intuitively people are going to take more holidays and they're going to want to stay in nice hotels and go to nice restaurants. So there's one.
All right, so those are the sectors that Mark Matthews of Julius Baer likes. But moving on and focusing on mutual funds then. Now, mutual funds check into the likes of SBI, Infosys and Axis Bank in the month of July while selling Eternal, IOC, NTPC. Now, what was the action like across categories? Sharad is now joining us with all the details.
July has been a very busy month for the mutual fund houses as they have been value picking, especially in the mid cap and the small cap space as the volatility was there. AMFI came out with the record numbers also, be the SIP or the equity inflows. But now let's look at what mutual funds have bought and sold for the month of July. Large cap segment, SBI, Infosys, Axis Bank and Reliance also make it to the list. Interestingly, CG Power also saw a good buying. Mid-cap space, there's Vodafone Idea, Yes Bank, which both those stocks are retail's favorite. Along with that, Canara Bank, Swiggy and LT Finance also saw significant additions. Lastly, the small cap space, Ola Electric, Ujjivan Small Finance Bank, Devyani, and the mid-cap banking space, the smaller names, RBL Bank and South Indian Bank also made it to the list. Now let's look at the stocks which were seeing the maximum selling in terms of value when it comes to the month of July. The large cap, Eternal profit booking was there. IOCL, NTPC, Samvardhana Motherson and GAIL were the names in the large cap segment. Mid cap, HPCL, VMart, MMFS, SAIL and IREDA were the stocks where selling was most. And lastly, for small cap, Sagility, Motherson Sumi Wiring, Hindustan Copper and IRB Infra saw the highest sales in the overall counters. Interestingly, the cash positions that they went up by almost 5 to 7 basis points and still going near the 6% mark for the mutual fund industry as a whole. But overall, strong bottom fishing happening in the mid cap and small cap indices. That is something to track for month of July.
So that's a check on what the mutual funds did buy and sell. Thank you for those details, Sharad. Moving ahead, Praj Industries reported a weak quarter. Profit did decline 94% on a year-on-year basis on the back of tariff concerns. Now, after a challenging quarter for Praj Industries, the management of the company, MD Ashish Gaikwad, did say that they remain cautiously optimistic about the future. Let's listen in.
It is a challenging time right now when it comes to the quarter's results. There are two main reasons, I would say. The first one is, of course, we know that the EBP 20 program, which is 20% blending of ethanol into gasoline or petrol, has been very successful and it has been completed way ahead of the schedule. The second part, as you rightly mentioned, is about not just the tariffs, but the uncertainty in tariffs, which is weighing more. I would like to mention a few points why we are still cautiously optimistic about it. First of all, we believe that there are discussions already in the play when it comes to additional blending mandates for ethanol, and that will certainly give an impetus. The other vector that will play on ethanol market and its more capacity addition will be the flex fuel vehicles and their introduction in the Indian market.
All right, so that's the word coming from Praj Industries management, cautiously optimistic. In fact, the stock dropped nearly 7% after that weak set of Q1 numbers. But moving on, which were the other stocks that were in focus in today's trading session, especially in the last hour of trading? Ashesha is now joining us with that list.
Well, yes, first let's put the spotlight on Alkem Laboratories, and this stock ended the day with an uptick of nearly 6.5% after reporting its numbers. Revenue grew by about 11% YOY. Profit after tax also saw a jump of 22%. Very strong set, Alkem Labs was soaring in trade. Granules India, meanwhile, was also up nearly 4%. Revenue saw an uptick of about 3% on a year-on-year basis. Profits, however, declined on a sequential basis. Remember Astral, this one also reported a very weak set of numbers. In fact, the stock ended with a downtick of nearly 8% in today's trade, where revenue declined by about 1.5% on a year-on-year basis. And margins also contracted to 13.6% versus 15.5% that the company had reported same time last year. Let's also talk about a metal counter, then Hindalco. That one reported standalone numbers during the day. Novelis reported a weaker than expected set of numbers, but that was compensated by stronger than expected standalone numbers for Hindalco this time around. So that stock was also in focus on the back of its earnings. Lastly, let's put the spotlight on a whole host of sugar counters that were in focus on the back of some commentary that came in from Joint Food Secretary yesterday, where he says that export could be considered for the current and next sugar season, considering the inventory situation in India and the allocation that could be done for ethanol. So on the back of this positive news flow that came in, we had all of these sugar counters that were buzzing in trade.
Yeah, so those are the details on the sugar space. Thank you for those details, Ashesha. Moving ahead, as India gears up for the festive season, optimism is running high across key sectors. In hospitality, demand continues to outpace supply, keeping the momentum strong for players like Indian Hotels. The auto industry, backed by a bumper harvest and the recent repo rate cut, is eyeing robust sales, with FADA expecting a record-breaking festive run. And in the EV space, Group Shaman sees infra upgrades, innovation and rising disposable income accelerating adoption. From travel to transport, the festive cheer looks set to charge India's growth engine. Let's take a look.
I think hospitality, aviation and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. All those who have looked at this sector as a cyclical sector were not wrong, but if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it.
The upcoming festival season, yes, we are quite optimistic, especially with the bumper harvest which we are expecting post the monsoon. We all are hopeful as far as the auto industry is concerned that this is going to be a bumper festival season for us.
There is an uptake in the EV space. Whatever the products are on offer are getting lapped up. Maruti, you mentioned, but I think it's driven more by the Mahindra and Tatas in that segment. And the adaptation is increasing. Earlier, there was a little bit of anxiety on the EV sector, which currently I'm seeing that it's reducing. I think it should be a larger number percentage growth in that EV segment, certainly.
All right, so let's see how that festive demand shapes up across the sectors. But moving on, government nudges local exporters to US to tap domestic market following imposition of US tariffs as a temporary measure to tide over the impact of US tariffs. My colleague Sameer Dikshit is here with all the details.
Amid India-US tariff uncertainty, the government is looking to explore all the possible solutions so as to mitigate or to reduce the likely impact on Indian sector. And in the same direction, the government is in active discussions with the exporters so that how they can play a role of shield for the domestic sector. The government has asked the exporters that whatever the inventory which is left unsold or which will not be sold in the American market, that could be provided here in the domestic market in India at a price which definitely will have some sort of marginal impact when it comes to the revenue part to the exporters. So they can absorb this particular marginal decrease in the revenues, but yes, their focus should be that the domestic consumption should not be impacted, and they can act like a shield, and then they can provide the inventory or the material which can be absorbed here in domestic market. For example, leather goods. So largely it is being exported to US market, but whatever the inventory is left unsold, or if there is a demand in the domestic sector, then the exporter should focus equally on the domestic sector by providing the inventory or the material. So that sort of active discussion is there. In addition to this, the government is also looking to tap the countries which are other than US and where India can actually increase the export as well. So in terms of export diversification, government is now focusing on 50 countries to which India export almost 90% of the total export, and that is being termed by the central government as export diversification. So with this sort of a strategy, government is looking to mitigate the impact that will rise due to rise in the tariffs in coming days.
Thanks for such important details, Sameer. That's an 18-hour exclusive, and government is now focusing on export diversification, looking at the tariff scenarios. Moving ahead, let's go across to Snehi and understand what are the important cues to watch out for tomorrow.
Well, yes, lots of cues to watch out for. First up, keep a close eye on trade data numbers back home and PPI numbers coming in from Japan. In terms of global earnings, all eyes are going to be on Tencent. But in terms of earnings action back home, since we're done with all the Nifty companies for Q1, from the broader end of the market, a whole host of companies will still be coming out with their numbers. The likes of Deepak Nitrite, AB, FRL, you have
IRCTC, Gulf Oil, Shilpa Medicare, Brigade Enterprises, Hindustan Copper, Devyani International, Jubilant Foodworks, and a whole host of other counters to watch out for. In terms of corporate action and board meetings, Godrej Consumer, Brigade, Concor, Sun TV, Interglobe Aviation, Railtel, NBCC, and some other counters will be trading ex-dividend, and it's also going to be the last day to buy shares of Bandhan Bank, Gland Pharma, HPCL, Mahanagar Gas, and a whole host of other counters in case you wish to be eligible for their record date, dividend record date. In terms of AGMs, the watch out for Godrej Industries, Ramco Cement, TVS Supply Chain, City Union Bank, and Metropolis Healthcare. And in terms of other events, Atlanta Fed President Raphael Bostic and Chicago Fed President Austin Goolsbee are going to speak. So this commentary is going to be important to track to understand where the US economy is headed if they speak about that. And the IEA is also going to be releasing its oil market report. So watch out for all of these cues, all of them very important to track.
All right. Thank you so much, Snehi, for taking us through all the cues that we need to watch out for in tomorrow's trading session. But with that, we're completely timed out on this edition of Your Trades. Mansi and I will take your leave, but don't go anywhere as more action coming up on the other side.